So I'm using a really tight moving average here, and this black one is a 8-period linear weighted moving average, and this is the 5-period. Here is a 1-period moving average. This is closing prices, and then the blacks, the black bars are just nothing but price range, non-directional. So there's no color to it because that would be a little bit too much information. I'm trying to create a template to scan 22 currency pairs. And using the moving average as a filter, it's more of like a standard deviation kind of envelope, the way I'm going to treat it, because I guess for the, and it's definitely going, you're definitely going to, if you have only one rule set in mind, and you're not willing to switch time frames to find, okay, you nearly have to, well, there's two ways to approach the market, I suppose. If you have a 8-period moving average like this, and you put it on 22 currency pairs on the dailies, that's going to be, you're going to see a setup difference on the daily. Then if you go to the 4-hour, and you run a whole nother broker, probably in a demo account, scanning for just 4-hour entries, those setups will be good. But you're realizing that, this is a 100 pip grid here, so if you're going to get your pip gauge out, anything, if you're looking to risk 100 pips to make 300 pips, and this is the weekly chart, so there's more pips here, right? But all these patterns pretty much hold up the same, because even on a 5-minute chart, we've all seen this one, but bam, 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 bam. Like, I mean, really, your trend bot your trend bot is in love with the market. I mean, it can't get any better. So I just watching this guy's video, and I'm like, every time I see the moving average thing, I go, that's really, if you're not an angry, impatient trader, that would really work out. That looks really good. And here it's gold. This is a 5-period moving average. You're already crossed over. I mean, you're tightened this thing up. I tightened this up so hard. And you're long, and you buy in the pullback, and you've even got, this is the head, the shoulder, the failure. You're like, oh, look at this. But here it's a little dicey. Here you're taking some punishment here. Here it is gold all day long. And this is what people will tell you. Well, that's true. And look at that, a whole year. This is right in the middle of the year of the weekly British pound. So this whole time that we have been in, on this weekly 8-period moving average translates to, say, you'd maybe go to a 34 or something, or a 50 on the dailies. And, it's bad enough I've got 2 moving averages on here. I did take it off. I could take the yellow off there and just leave the other one. The Alexander Elder entry technique is when the market pokes up into this thing, is your entry. And what he does is when it comes up in here, it pokes above, he puts a sell stop here. So he's getting in, especially here. If it came up here, he'd have a sell stop tagging in as we poke up into the trend. You could also sell here. Right, you could just sell anywhere along here, but you will get crushed to death. Even in a weekly trade, that's why you'd have to trade multiple orders. There's no way around it. You've got to spend the extra time and energy, money. I'm just saying, in my estimation, what I've seen, because sure, you could have actually bought right here, and you have to take this 120 pips of heat to realize this move. And here you could have said you don't know what's coming, so you're like moving average crossed over, get ready to sell. You get really trapped and chopped here, and this could be a 5-minute chart. But the structure thing holds. Whereas if you're trading strict rules on your thing, and here you're just getting obliterated by that trend system. So how do you deal with it? Well, I guess if you see this setup, of course you knew that when you took this out, it could be a complete, just in sheer terms of this hole being filled. But the breath that it takes, one closing up to the river, that may be your only place to get in. And if it's a small area, your cell stops below that, maybe this fractal. And when they come up into the previous, that's about as good as it gets. And here you can't, maybe you could, this weekly chart, it's always about, is there a time frame to drop down that's cheaper? And when it gets so cheap that you can see the spread on the screen like you can right now, the spread's about 50 pips on close in this broker. So this is the spread right now. This is what you'd, if you just went, and on this thing, British pound, this looks like they're just trapping the bears down here in a way. Yeah, I could get some follow through and maybe make it to here, right? And this is the weekly, but to me, it's really been quite the range trader's dream, regardless of, oh, we're in a downtrend. I'm sure that bigger moving average is going to look like this. You can just kind of just take your mouse and just do your own, like, okay, we're going down. Whoa, maybe we're going up. And once you realize that you can just create your own moving averages, like we're going down. Looks like we're going down right now. Like you could just scribble on here, okay, we're going down, duh. Last move was down, but the thing is that so let me just drop down to the daily here on this thing time frame, and just take a look at, this system here of just holding this 8-period moving average, and you just put it on 22 currency pairs and just go hunting for that setup. Like here, obviously the only time this system would have traded here would have been over here, and this is about as tight as it gets. If you're on a 20-period EMA, there's no trade here. There's no rule entry. Even if you had maybe an 8-period moving, a 13-period moving average, there might be an entry there actually, as where this thing rallies up into a turn down moving average, and you can kind of estimate without getting all fancy that's if you do your own lag on this. Market's up, but you're not convinced, then it rolls over, and maybe about right here you get this perfect setup where this is pointed out. That's another thing. When I was messing around with moving averages, I thought, well, shouldn't you have a rule if you had to tell somebody your system, if this is the moving average is pointing up at any degree of point up. It could be a shallow point up. You're just trading from the long side. You take every long trade you can get. Now, that's the other devil in the details, is that do you get in a stopper or the market or with a limit? You get in all three. You just keep going long, right? And so when this thing's up, here's when you still keep going long, but now what? And this is brutal choppiness. So I'd say, well, you're looking for this setup on the lowest time frame you can get to, I think. So let me just go to the 15-minute. Now, in the 15-minute world, I don't think it much. This is completely the reason why the time frame is a big deal. Now, here you might want to have a longer moving average. So here in this instance, if you're on the 15-minute chart, you cannot treat this, well, you could, I guess, right? You could treat this with all those same rules, but maybe you want to make this guy a little bit fatter. So insert a 13 EMA or 21. I guess if you want to have a Fibonacci or 20 EMA. Now 20 EMA is standard operating procedure. Apparently there's people who built, they bought Ferraris from it. But you've really got to scan for the setup that you're seeing at that time, looking for something that's in that pocket, and that's your only trade there. And you have to stick with that thing if you're going to run the 20 EMA. So let's go for a standard exponential 20. It's twice a 10, right? So it's even kind of, and here's the sweet entry, right? But that's the 15. There's, if I go to the daily, you see any trades there? No, you chop to death. Maybe here. Look at that wick. 100 pip wick. No trades on a 20 EMA. For me. Half hour? Yeah. is you come up into this envelope here, and this would be like a moving average envelope, and you're well below this. 1 hour, yeah, you know what? Not so good. It looks delicious right here, though. You know. So if you're running, say, if you're a half-hour entry, 20 EMA, and you set up all these templates, and that's all you're running. So what I did was here, I did something extreme here, and I'm gonna show you on the Australian dollar or whatever is low. I got 22 currency pairs there, but here's an idea I came up with, which is to make the 2 and 3 period moving averages, and I've got about 8 on here. I've got 2s and 3s, and they're smooth exponential, they're linear weighted, they're simple, and it's all just stacked up. And then I put all those on top of a 1 period moving average, which is the white line. So I'm trying to look for something that's super tight entry. The different rule system, though. This is more of a market. It looks to me like you would trade this at the market on a, say, if you're on a 15-minute chart, you could trade it. So anytime it dips, anytime you see the white below the river, and you're just going to buy. Right? You buy, you buy, you buy, you sell, sell. You sell, sell. You're selling the market just getting a little ahead of itself, overheated. Now, if you back test it in your mind, it may seem like a ridiculous trading system. But this also, different rules. Now, if you're buying this market being completely extremely overextended in the short time frame, just poking its head like the wicks, but it's closing there, which means it's locking in. So you're really pulling the trigger when you see that. Now here you could say, well, you got a little killed here. So there's a caveat to every system. Here it's poking below, you got killed. Here you made tons. Here you made tons. Here there's no entry. Here's a little bit of a white poke in. And here you're selling. So actually buy, sell, and it's almost like overbought, oversold that you would see in an oscillator, because you're really getting just above the edge of the market. Here's a sell. So you're just looking for, if you had to come up with a rule system for the market, and why is this? Oh, that's Sunday night. So this is Sunday night here on this broker. It's kind of neat. So you can see the pullback. If you wanted to go long, and maybe you do have a normal normal moving average on top of this, say, okay, I'm going to pick a this is where it gets very complicated. I'll just put a 20 EMA in here. So you come back in. So one more level of filter. You're dipping below. You see the 2 whites. Buy. This is going to filter you out of this trade, right? You're not going to buy here now. Here you're buying this whole thing. Well, you're buying that first poke in, and this one for sure. Just nuts. I mean, this is a hammer sitting outside of the window of the world. And here, I guess, now this is where you would say, I would buy here based on just the white, and that's the close just peeking its head outside here too. Here's probably the best entry, and this is just where the market is extremely the beat of the market. I said in a video earlier, some guy liked this video, and I thought, well, it's totally everything you say has there's 2 sides of every coin. So I said in the video, the market doesn't see time. Well, the market sees volatility over time, I guess is what's happening. I mean, there was momentum trading is what this would be, where you're just selling extremes. Sell, because you're getting hurt here. Sell. This one is so outside the realm, just like this one. You got to sell that. I mean, on a 15-minute, right? Boom, boom, boom. Sell, sell, sell. Whoosh. And that's the, you could say, well, I should be buying right at my 20 EMA. Ouch. Okay, so not always, but, you have to come up with a real system that you can just see the market, hit the button. In the half hour, buy these whites. Anytime you see this creeping outside the movement, outside there. And because when it's turned around, it's already too late to consider, well, it's moving averages turned up. You buy in here, you're getting killed. Now, this is really like a buy at the market system. It's also a buy on a limit system. I think the limit orders are always going to be structure orders like this, where you're looking at the previous top. And since they have a big black line here, you can use the hump here, and this top became a bottom, not only in price on close, but also there was enough sideways consolidation here. And you can also draw trend lines on these big fat smooth out moving average. Now this one moving average here that's kind of laggy. I may have to get rid of that. But that's about as laggy as it gets. And then I got 20 EMA. Now here's an amazing entry. There's no white here. There's just a smidgen of white. Of course, I could actually get rid of the 2-period moving averages, see, and I could give myself a little riskier entry on this technique. If you imagine, if you took off the tighter moving averages here, you're going to see the signals pop up more often. So if I stretch it out, you can probably see it now. So yeah, so this thing's white, and like you can see the this is the big doji here. So you've taken me through. It's just like really this is Akinashi, but just moving average Akinashi. But this kind of gives you that feel like, okay, how strong was that move? And when you see this, this accumulation phase, because anytime you see like a double bottom, they just poke out, so they really jump out at you without too much. Well, I guess it's easy for me to see. Now, running this template across the board on every currency pair. So if I was trading on the 4-hour charts, want to trade with a 50 pip stop at the market, and you run up all the 4-hour charts and you load this template, and you just put it on everything. So this is just going to make it easier to gauge just how strong some of these moves are. Well, at least it looks like it jumps out at me. But so if you're going to pull the trigger on the white, this is a 15-minute chart on 22 currency pairs. So if you're day trading this thing, you'd be selling this white, and you'd be buying this white. You'd be selling these whites as it pops in. Another thing you could consider is that if you don't see any white, that if you see all these moving averages get very tight and quiet, you can start placing buy and sell stops, which means the market has fallen asleep, and when it wakes up, it's going to run and turn white, but you want to get in before that. So that's another way to look at it. Right here, you're actually going to be buying. You're in the process of getting ready to buy, if only for the scalp. And this is quite the right into the close. The dollar was pretty strong here, and there wasn't actually this broker closed a little bit early, so you don't see the it kind of came back a little bit here. And this yellow here, this is a spread. Unfortunately, when this broker closes, you can just see how difficult it is unless the spread tightens up. But this is like a 15-minute overbought and oversold indicator, because as this thing cuts through, and this is really, just I guess a Western version of Hakanashi. And here it's just going through the floor. Now, how would you have traded that? Here was your sell. Here was there's no sells to here, but when you don't see any white, you can start putting in stops. So it does have a rule system to it. And it may look ridiculous, but hey, you know, you sold here, and this counter trend trade didn't make a lot. But when it goes into pure black here, you can put a stop, buy or sell stop. It doesn't really matter because, well, here you'd bought this and then it went black, so you put in maybe sell stops or buy stops. And if you do an equal amount of each, you'll just get picked up in it. It's just going down. Here you got white, so you have to be buying here, but you're already short if you got in on this thing. So you are getting a little. Actually, the more this pokes out, if I made this a little bit bigger on one of these moving averages, I could filter it out, or I could go to the half hour. Here you buy. 4 buys in here. You actually have to buy that, and it may seem counterintuitive to buy as it's going down, but at least you're limiting your buy here. You buy here, you got killed. You buy, and you're getting killed there, scalping that, right? But you're really, when it goes into a small black triangle here where there's no, this is a half-hour chart, and you're hopefully got a tight stop on it. So even though you bought here, you really, if you don't pull the trigger till you see a big, you know, this is always the problem with moving average systems, is that you're going to, if you stick to a strict rule system, you're going to get hurt. Now here you have buy for this, and then you had to sell these peaks. Buy, sell. Here's where it gets really whipsawy, but here would be your sell. If you would take the counter trend trade, the white poking its head into the river here. And I could get rid of this moving average here maybe, or I actually could take off some of these moving averages, but it's all about filtering. That's all moving averages really do, is filter. If you go to the 1 hour, your entries here would have been buy. So here you got a little hurt. You got stopped out. But if you took the same approach, you would have sold here. So buy, sell. It's better to have a nice peak, a nice sharp peak like this to sell on, and just boom. Now when it crosses back into the black, if your rule system is to place non-directional or directional stop entry, you get picked up in that little bit of extra stream there. But you're definitely buying here, right at the 1 hour. Right, actually, this is like an inverted hammer. So this is actually showing you hammers. In essence, it has to be an inverted hammer to give you this signal. So you're buying all the inverted hammers, and you get a little chopped up here. Here you're going to sell because you got white, you got hanging man. So that's basically three hanging men here. Just here you got to start thinking about buying. You know, coming back to here and buy one at the market, and wait for the next hour to go by. And if it goes all black, so yeah, if you need a 5 minute, it's like buy here. That's it. Yeah, like a chance to buy. No buys. Here's your sell. 3 sells. You know, finally make your money back. Buying like crazy here, right? And so you're selling here. And actually, after that, it never even went up here. Of course, you know, I wouldn't need. This is obviously news of some type. I guess it's NFP, right? Because it's dollar yen. Well, it's pound yen. But all the markets went berserk. So if you put your berserk orders in, like, look at this. Come on. And this is why you have to get in a diversified method. You can't just get in one way. And look at this nice smooth. Here you're running buy stops because it's all black, and maybe you're buying this as it's dropping. So it's white. You got to buy, plus you have the buy stops. But this is a pretty tight filter, 3 period. I can make this 2, but then you're going to get maybe put a 4 period in here and chop off some of this. One of these moving averages, you just pull one off and it's going to change the whole. Not the whole dynamic, but and even a 5 minute, 1 minute, right? The 1 minute you're buying right here, buy, sell. Of course, here you're selling, but here running it's a 1 minute chart for God's sake, right? a little tough. And so if you want to smooth it out, and then you could just, if you have 5 minutes, you smooth it out, and you can just see all your entries. Buy, sell, 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 and you got the stop stacking up. You don't see anything. You got the here's the top bottom right on the hammers, the peaks, and then you can see, you can just see right, they just jump out. Here's those fractal, and here's the bottom becomes a top on the fractals. Closing price is poking its head through these. Here it's a buy to here. 5 minute chart. Sell, sell. And, you know, if you're willing to do it, right? And then here buy sell. Here little buy signal. So you're filtering it out, and you could put the broader moving average on there, right? But that might be too much to think about, because now you're thinking in terms of what happens when it gets here. So anytime you got a what if floating around in your head, you're going to be distracted. And but there's a, you know, I could trade this system at the market and on stops. Maybe not limits, because if you're going to keep maybe a couple limits, like 3 pips deep, 4 pips deep, right? If it, like, say you get this signal to buy here, you buy at the market with a couple trailing tight limits and a tight stops entry. But you got to keep that. You got to determine that. This video, I just watched the guy's video say you can't just run a 50 pip stop. I mean a 30 pip stop to make 50 pips. Yeah, sure you can. Why not? You could also write one that makes 20 to make 60. I think you do have to run more than just one bracketed thing. But you do pretty good here if you're getting on stops with that kind of ratio, and then you just dump. You know, at least you know. Like if you want to make 4 times your money, you know, write a script that runs 25 pips to make 100 pips, and let the market pick you up in that trade. So if you keep punching that button as the market's dropping, and you're like, okay, boom, 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 they finally pick you up. You don't make your big juicy target. You don't make it, but you're also trading the other direction. Sell, sell, and this one has the bigger target. So if you're trading bidirectional, that's what the whole binary option thing's about, right? It's about, and then you just see nice buy here, you know, just wow. If you took these buys, they're not really the greatest buys, but if you're running the stop, so the whole time it's black, you're stop mode. You know, it's just passive entry, and then markets, when you get your market order, we get the signal. It's going to be buy at the market with a couple limits, and definitely the stops. More stops, actually, in that trade. So since this is the 5 minute chart, I would say this is going to be buy stops that last 15 minutes. So even if you got filled on this fractal here, yeah, you made money, but it took some heat too. The ones that filled here are better. So when they get really tight into this, real tight in, and you're buying into that stuff, here there's a big vacuum forming. 2 sells that didn't work out. Buys go sideways. But when it comes back and you get that top bottom on the, I mean, this is just faster. There's more signals on the 5 minute chart. You don't have to trade that hyper, but if you have a hard stop written for 10, 12 pips right across the board, then if you go to the next time frame, say half hour, right? Less trading. But when it does get a lot of black, smooth, anytime you get this nice smooth undercut, think about, you know what, it's getting a little overbanked here. You're way away from that one moving average. That's like way out there, and just right up in that top. Here's a nice sell. A diamond, a mountaintop inside, poking its head out of this big, obvious down move. And this poking its head up into the previous top. So if you look back there, It's back into this guy here. But it's just a way of filtering. But yeah, if you're going to run all these currency pairs in here, if you're day trading, you're like, okay, look at this guy, look at that guy. And it's like your heat map, I suppose. It all depends what time frame you're comfortable with. And some of these choppy, look how choppy this thing is. And this was after this big explosion here. But here would have been your scalp sell on the when the dollar went ballistic. And here would have been just sell stops running. Could you really? Not really. I mean, you guess you could put buy stop in there, but they'd probably chop you to death here. And here the sellers started to come in at the close. Here I don't know what happened after that, but from the daily, if you went to the daily, that's a little different, but you know, because way more pips of risk, but there's only 3 buys here. Well, here's a buy. So anytime the market closes here at the end of the day, these will all be buys here. So I would take these regardless of moving average, because now you're in the daily chart. You know, it's like, geez. But it's about the market extremely moving into price zone and just letting the closing price, because that's what people always talk about. Oh, it closed there, it closed here, it closed there. And you have these 2 extreme closes that just tag up nicely. Double bottom off of this thing here. And when it's plunging, you know, you got buy stops running here. Like the moment this thing turns around, and but also buying into that. And then it rode it all the way back to this peak, which kind of overshoots this guy here. I'm sure a lot of people are just happy to make money to there. And we don't quite make it into these places here, but yeah, I think it's totally, you know, this is major sell zone up here. So I'm just going to put sell limits up here, regardless if this is white. But definitely you had to sell here on close. Coming right up into this, you know, big target for everybody there. Target met. Okay, sell. It's coming down. You don't overcomplicate it. Here's a retest of this peak moment. So if you're a limit order trader, that you're just trading the grid of 100 pips, like all this analysis aside, don't forget, you can always at the same time be just saying to yourself, wow, we're at the 100 pip, we just went up 100 pips, we keep retesting the 100 pips, and you just have a trickling buy. Like here, buy limits, sell limits, buy limits, sell limits. This went on for a month. Buy limits, sell limits. Here are the big juicy close. So maybe these were the trades that you filtered out. You only took this trade here. You only took this entry and this entry, but wow, on the edge of this thing, holy crap. Keep probing into that thing, and then just they're dying to get above this price. They finally poke out the rip back, and you've got your sell signal. And you can just see, wow, come back to here. Another buy sell, buy sell, buy sell. And this kind of like makes it easier to be a buy sell guy, because here's your sells. It's white. It's overbought. So it's really basically overbought, oversold, the 3-period moving average, or 3-period oscillator basically.